Good morning, everybody. Welcome to the Flow Show. Do excuse me, I'm just keeping an eye on the headlines because we got Ishiba talking about this meeting with Besant. And as I'm long dollar yen, I want to keep an eye on what's coming out from that. It doesn't look like there's anything positive coming out at the moment. They want to continue talking and blah, 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 blah. But nothing positive, it seems, is going to be coming from that. So we'll keep an eye on that today. Lots of risk for the yen today and into the weekend. Morning, Kate.
Morning. Yep. Headlines just a sec.
He's sure we can have a good deal.
Okay, Besson says sure they can have a good deal, but then nothing really being discussed, as Yeshiva says. Okay. All right. Yep. TGIF, mate. We are here. It's Friday. Just hopeful that we don't get too many Truth Social bombs this afternoon, so we can go for an early cutoff today.
Yeah, that'd be nice. Nice afternoon down the beach. I've got my name written all over it. Right, but we have got work to do before then, so let's get cracking into it. Going to start with a bit of data over in Japan. We had the national CPI numbers coming out, which were a little bit softer. Headline CPI coming in at 3.3% from 3.5%. One of the core measures coming in at 3.3%, down from 3.7% previously. However, one of the other core measures, ex-fresh food and energy, went up to 3.4% from 3.3%. We're still sailing pretty well above the BOJ's target, and more this CPI is looking what they describe as sustainably above their target. As you can see there, we are looking sustainable at the moment. However, they still think that a lot of this CPI pressure is coming in from what they call cost push inflation, things like rice, which has been shooting up in price due to bad harvests. So they're not thinking that this sustained inflation is the right sustained inflation, but ever a cautious bunch they are anyway. So we've had all these Besant comments, something we were waiting for. Doesn't look like anything's coming out of that of note. Now we do have the election over the weekend, and that's going to be the next risk. Several things to note. First and foremost, Japanese stock markets are closed on Monday. There is a holiday on Monday, but bonds and futures are open. Ishiba will be planning to meet the press at 2 p.m. local time on Monday. That's going to be obviously after the elections to say whether he's happy with what's gone on or not. And it looks like Japan's Ministry of Finance are starting to... where's that going? Japan's Ministry of Finance are starting to circle the wagons because apparently they highlighted the need to monitor currency moves. So we already heard that they are going to be, or some of the Japanese government officials been talking about watching the currency. Now the Ministry of Finance is on the ball. So there's probably going to be a bit of heightened scrutiny from market watchers over the weekend, depending on what those elections throw up. Kate, any last thoughts about all this weekend risk?
Yeah. As I updated earlier, yeah, it is kind of a big risk because it could get messy if they really lose their majority LDP and Komeito. Just been reading through the latest comments from over there, and the opposition still have difficulties to rally around one single person, but they are already softening their stance, it seems, a little bit on demands for tax cuts. But it's a clear case that if Ishiba doesn't get the majority, it's going to be a bit of a mess, and I trust that MOF, BOJ are going to be ready. I still maintain that potentially BOJ will and if needed, actually, will step in relatively quickly to calm the bond markets. But FX is going to be another thing, and as we've already said yesterday, I think we still have to keep kind of in mind what Kuroda said, because it was a pretty decent indication that he gave us, that if the yen or if dollar yen moves more than 200-300 pips a day for consecutive sessions, that would indicate a disorderly market, and I guess in this case, if anything specific happens, they will move through the several levels of alert pretty swiftly, and talk about speculation probably straight away if the dollar yen opens, I don't know, but let's say above 150 towards 151 on Monday. So yes, it's this, not a lot has changed, but we were also saying like, okay, I mean, it would be perhaps a half a victory, or at least pushing people to perhaps vote a little more for the LDP if they would have managed to get Bessent over the line to say something really positive. But nothing came out of this meeting, so we're back to where we were, and now just pure election watching on Sunday.
Yeah, it's going to be a late night Sunday. See what happens with that.
Yeah, I
It's not
guess
getting
so.
news from that. So yeah, we could be all up and ready for an early start. We shall see. Right. Anyway, back to the data, and we're going to be looking at just a bit what's coming up in, or has come out in Europe. Bit of PPI data from Germany, coming in a little bit softer than last month. So no big inflationary pressures coming from that. Apart from that, it's been fairly quiet on the data front. We've had the BOE apparently asking some lenders to test for resilience to US shocks, or sorry, US dollar shocks. Apparently they want them to test scenarios including the US dollar swap market drying up. That's pretty much following something that the ECB has done as well. However, the Bank of England declined to comment on that report, which does nothing but get the speculation running hotter. While we're on the B of E, loads of banks are changing their forecasts. We knew about a couple already. Goldies, just to give you the rundown of all of them so far. Goldies now expect a hold at September versus a prior cut of 25, and now they expect them to deliver sequential interest rate cuts from November until reaching a 3% terminal rate in March 2026. Citi, they moved to hold in September versus a prior cut. Again, also delivering sequential interest rate cuts November till March. Morgan Stanley now also expect a hold in September versus a rate cut previously. Bank of America, they expect the BOE to cut twice this year in August and November versus prior forecast of 3 cuts, August, September and November. So they've cut out September as well. They also expect a rate cut in February 2026 to take the rate to 3.5%. JP Morgan as well say an August cut looks very likely. They say there's been some rising risk of a rate cut in September, but that's not their base case. So a lot of the market thinking we're getting a cut in August and then a hold in September or further out. Right, Bundesbank President Nagel says if tariffs materialise in August, a recession in Germany in 2025 cannot be ruled out. A big warning for their 0.7% growth forecast next year, which could possibly be eaten up by tariffs that are now on the table. So the tariff effect could pretty much wipe out any pickup in activity over there and all their infrastructure and defence spending, at least for this year and next year, which will make it all moot. Data yesterday, retail sales from the US that came in pretty good. We saw retail sales at 0.6%. We saw core sales 0.5%. Ex autos and gas 0.6%. Also, ex-autos 0.5%. So pretty much above expectations. Yet again, the US consumer isn't ready to roll over. We also got the Philly Fed coming in at 15.9, a pretty solid read there. And other metrics as well picking up. Employment was a negative last month. It's a positive this month. New orders up a healthy amount as well, as were prices paid. So maybe there's a bit of turning the corner. This could just be a bit of follow through after all the front running and inventory building, and maybe things are getting back to a more even keel. We also got import and export prices as well, which parts of which feed into PCE. Import prices year on year came in down 0.2%. They were expected to rise 0.4%. That's particularly the component that will feed into PCE. Export prices, though, going up 2.8% from 1.9 previously. Jobless claims, that's still doing its thing. Claims dropped to 221,000. Continued claims still trucking around the sort of 1.9 million to 2 million mark. A bit later than that, we got business inventories, which were flat on the month. Flat estimated, flat last month. Retail inventories were up 0.2% as expected, same as last month as well. Just going to have a quick look what's coming up today. We've got housing numbers, housing starts and permits, and the flash Michigan number for July. So it could be an interesting number to finish off the week with. Any thoughts on any of that data, Kay? We got a bit of a reaction on retail sales, but it didn't last too long.
Well, isn't it a bit what we are seeing these days? You get a reaction on the back of data, lasts a few hours, and then it completely fizzles out. And you can say the same thing about the Aussie jobs report, which was not very good, and then it lasted for half a day, and then now we are back to roughly where we were before. And the US retail sales was the same. Has to be said that there is still a bit of this correlation going on with higher equity markets weighing a little bit on the dollar, perhaps the risk thing. If you, but yeah. Nothing to moan about those retail sales. So yeah, the only thing we can say is that the effect was extremely limited. Maybe the people were expecting that, and I don't know. I haven't read anything about it on the famous FinTwit pages. Also, thinking that next month will be an absolute disaster, but yeah, there's not much else to say about this.
Yeah, no, we get into summer season as well, so maybe that'll keep retail supported as well. We have had various Fed heads out. Fed's Kugler says it's appropriate to keep policy rate of interest steady for some time, given low employment and building price pressures from tariffs. Now, everyone, they've all taken up the baton now. We've got several Fed heads coming out and giving their PCE expectations. One of the reasons they're doing this is because you can get your abacus out and take the CPI and PPI data and stick it into models and come out with expectations for PCE. It's just a bit strange that they're all at it now after Powell started that off. Anyway, Kugler reckons PCE coming in at 2.5. and core at 2.8. Joining Waller as well, who says 2.5 and 2.7. And there was someone else, I can't remember who it was, but we had that the other day as well. So we're looking at 2.5, 2.7, 2.8 for the next PCE number, which I think will be in a week or so's time. I haven't checked, but we've got a ways to go yet. Fed's Daily says there's still some work to do on inflation. Some effect of tariffs showed by the June CPI reading. It says holding policy too tight could create a labour problem, but not seeing evidence of tariffs spilling over more broadly into persistent inflation. 2 rate cuts this year is a reasonable outlook. So she's not changing her view that 2 cuts are possible, and in the latter part of the year. Well, it's only got the latter part of the year to do them in now. Fed's Bostic says the economy's tariff adjustment could take months. Rate cuts might be difficult in the short run. Fed's Waller banging the drum again. Fed should cut rates 25 points at the July meeting, and delaying cuts risks the need for more aggressive action later. Not a tune to Trump's ears. He said that a July cut could give the Fed space to hold rates for a few meetings. We've also had ex-Fed, potentially new Fed, Walsh out saying that he strongly believes in Fed independence. Says we need a new Treasury Fed accord like in 1951. You'll have to ask Dale what that was about. He said it would make the accord easier if one person led the Fed and Treasury. However, the same person at the Fed and Treasury would hurt credibility. If you're looking at old crypto space, Trump helped give the market a little bit of a boost as well, because apparently, according to reports, he's going to open the US retirement market to crypto investments. So if you're looking to retire, you may be getting some of your gear in the old crypto space. That's it for the headlines. Not too much of note. Kate, anything else?
No, I think it's been a very quiet night, right? No, the rest is now, I think, waiting. All eyes on Japan and what, you know what? I mean, geopolitics all the time, yeah, because we had some quite unfriendly, as we can expect it, remarks from Russia towards those planned weapons coming into Ukraine. And then also, I think something that was interesting, though, is that this 18th or 185th sanctions package from the EU towards Russia, and there's two Chinese banks named in there. So the Chinese already reacted a little to it. So that is still keeping the friction level at quite elevated, I would say. So that is something that perhaps we keep an eye on if that starts to cause more disputes between China and the EU, perhaps. Are you gone?
Oh, sorry, I was on mute.
Are you off to the weekend already?
What?
Are you off to the weekend already?
Yeah, I'm off. I'm halfway out the door. Yeah, the 18th package finally passing 2 weeks after they said it was going to pass, with the EU proclaiming that it will put more pressure on Russia and make it more difficult to continue waging a war. Yeah, righto, like the other 17 have done. Hasn't stopped anything. We also had, just worth mentioning, that we've had a few countries and political parties pushing back against the EU budget, Germany being the latest and biggest one. So my forecast of getting the 2028-34 budget passed by 2050 is looking a bit grim. We might have to push out to 2060. So that's the bum fight that's going to be going on for a while. Right, just got a Reuters piece on the Bank of Japan popping up, saying that the BOJ may offer a less gloomy view on the near-term tariff impact. That's according to Reuters. That's talking about their upcoming quarterly report due this month. So they could be turning a little bit more bullish about the situation. Look at that, dollar yen's gone up. So the market not buying into that one. Right, where should we go? Might as well go with dollar yen while we're there. This one's sticking around the high at 148. It doesn't look like it wants to go through that 149 meaningfully at the moment. So Kay, this has got the impression to me that the market's set. It's done its thing, and now it's just sitting and waiting. I think the most we may, and outside of any headlines, of course, I think the most we might get is potentially a bit of profit taking into the weekend, but I can't see us dipping that far.
Yeah, I think a lower dollar elsewhere is holding this one back from rocketing. But look at the yen crosses; they're all trading around highs. And that's what I continue to say. I mean, it's not only a dollar yen thing. It's really the one is pushing the other one up. It seems dollar yen round of buying, then you buy the euro and you buy the cable and you buy the Aussie afterwards, and you create yourself a cross, and all those crosses are trading pretty high going into the weekend. I suspect there may be a bit of slight volatility going into our afternoon. US Friday, maybe some profit taking, or but I mean, with those elections ahead of us, is the yen really going to gain much? The big risk is for Sunday night. So I yeah, we will probably see a bit of position reduction, and then we'll see what's going on. The market has been selling yen going into the weekend, going during those let's call them up to now failed trade talks. So is there a bit of position adjustment to be done going into the weekend? Very possible. Is it going to last? I would not think so. I will be surprised if the dollar yen loses a big figure. Let's put it that way. Unless obviously something happens to the dollar, but I don't see. Well, we've got Michigan out this afternoon, but then we know the how that is a data set of communicating vases. If the inflation expectations are higher, the consumer is not going to be happy, and vice versa. If you get a lower inflation expectation, you will have a happy consumer, and that may provide an algo blip. But I don't think that is well. Is there really much going to happen to the dollar apart from if the orange hurricane wants to send out a few truth bombs before the weekend?
Yeah, and that's always possible on a Friday, at least before he heads off for his annual or his weekly round of golf at Mar-a-Lago. Anyway, I'm sitting in along, and I'm going to have some decisions to make later in the day. If we've gone through 149, heading up towards 150, then I'm going to have a decent bit of margin to run some into the weekend, but I will be cutting a good chunk. Even if we're around here, I'm probably going to take a bit more off and just leave a little bit of the long on, because I don't think we're going to get any massively great news out of Japan over this weekend. It would be a bit of a surprise if we do. That's not to say it's going to be horrendously bad, but I don't see at the moment many paths why the yen's going to strengthen meaningfully. I'm actually a bit surprised, Kay, we didn't get anything on those Besant Ishiba comments, because it doesn't look like anyone's trading any hope of a deal at this expo thing.
No, we had a bit of how should I say hopium dollar yen down from 148.80 to 50 when they were coming out of the meeting. I guess the Japanese saw that before us, and that was it. And now we are back to where we left it. But again, yeah, I'm a tad long dollar yen. I think it's you know what I mean, and I've been thinking about that even from the start when I started to be long dollar yen the other day at 146.80 again, and I've always had this impression I was in the wrong instrument. Yeah, dollar yen is higher, but then I've always had the impression that maybe it's better to hide somewhere in a cross to eliminate the dollar risk because of Trump somewhere or Besant also. But yeah, we are here. I mean, I still think we could have a big move on come Sunday night, Monday. But obviously, market has already a fair part in position. I would say position for a miss or a loss of majority in for the LDP and Cometo. So I'm not sure we are going to see any big continuation of this today. I'd rather think that we are going to sideline a bit, give and take 20, 30, even 40 pips up and down, you know. That's I think that's it for this week for trading yen at least. Because what do you want to do? I mean, you can't start to buy yen hoping that LDP keeps its majority, because if it doesn't, you're looking at a 200 pip hole in your portfolio. But there's no reason to go and sell more yen either now, because the result isn't known, right?
Yeah, exactly. And yeah, we're really hitting our head on this around this 149 level, which tells you that the market's maybe done as much as it wants to do. Mike, we spoke a week about Powell and Trump, and I'm not sure
Powell
if
replied,
you
by the way.
what?
Powell replied, right? He sent a letter to vote, and
Yeah,
like justifying all the works, and the internal review is still ongoing. So
yeah, it was all
my
signed off. I
thought
think.
my thought is that is not going to fire Powell for the color of a revolving door or an elevator. You know, I don't think that's a strong enough case to and let's not forget, he can't fire him over a weekend. This has to go through committees, and even at the end, I guess, SCOTUS, right, the Supreme Court.
Yep, that's exactly right. Right, what else? I'm just going to go through a couple of others. I think I might chuck. I've got a Aussie Kiwi long on right around here at 24 that I jumped into yesterday, but I'm not feeling overly keen about it. Just on the price action today, I've been wanting really to get in shorts from above 110 or at 110, but we didn't quite get up there. Pulled up short, and now we've had this breakdown, and it's holding around this 109.50s area, and now it's holding this 109.30s area. So I'm a little bit long just to trade off this area down here, but it's not looking good. So I might chuck that out the window and just come back again next week and see what's going on with it. Aussie dollar, that's getting back in the hunt a little bit. We had this dip yesterday, or rather Wednesday through Thursday, and now it's coming back. We're knocking around this 65.10. We were holding it. Again, one of these levels on, off, on, off, on, off, on, off. We're above it again now, which means we might get another move up to the zone and see if we can get above that again and maybe have a look at 66. But this is entering a little bit, or staying in its sort of sideways action now. I was looking for maybe a move down to 64.40s and this big level that we had previously, but doesn't look like we've got it. So it's gone away without me. Dollar CAD, still a bit long on this one. It needs to hold here. It needs to hold this zone. If it doesn't, then we're going back into this malaise. It will be a more bullish signal if we hold here. Then it will give us another crack, potentially going towards those highs. We are back below this level though, 137.55, and already just starting to have a bit of resistance there as well. So if we do bounce from here, we're going to need to get through that again. But we're still keeping this uptrend going, and the bigger picture is still showing that we have potentially put in a decent, serious bottom. But you know, get up to the 38.2 of this leg, or the 50 of this leg, and we're holding it already. So we know where the levels are from now, but it's still in the running to potentially continue higher unless we're back below these levels and 136.50. Right, Clay, I'm going to punch it over to you, mate.
All righty. Yeah, I'm going to run over the Kiwi chart, Mike. I'm actually right on it.
Just to answer Fred, his question on the RBA, well, the chances of the RBA not cutting rates despite getting bad Aussie data. I still don't think that data was overly bad. And in the context, as unemployment rate is still very historically low, but who knows what their margin is for it. I don't think a cut is as perhaps as a higher probability as the market's making out, but only the RBA know.
All right. Kiwi, we just held the channel Mike, and was talking about this level yesterday, 59 figure 10. It's held. It's pretty much in line with what all the dollars ex yen and perhaps Swiss to a certain extent have done. Bounce, but we are coming into levels here that have been traded relatively actively, which is 59, 65, 70. We are actually bang on it right now. Then we have a bit of resistance, trendline resistance coming in around 59.80, and then obviously last time remember there was this move up to 60 the figure, which found immediate sellers when we went up there. So that's going to be again the level to watch. And as I was saying on my my morning update in the room, etc., and for our subs in the FA community, it has to retake those levels to push through, but we're getting back to more neutral levels. What is going to be a worry for the Kiwi in the real short term and on the day, on the intraday, is if we move back below 59.30, then this will just have been just one more correction in something that may have started from those 61 highs. So corrective for now, I would say, but interesting that we held here. So you have a few decent levels to play around with if you want to trade the Kiwi in today's market. So it's an interesting hold, and then I need to go straight away over to the cable because this one has really done it perfectly, virtually to the pip. And we are really this 133.70 75 is building up as a decent level. And if it would have been like one low, another low, this is the Trump Powell thing. But one low, another low, and then now we see, and I'm not sure if I would call really a bottom yet, but doing it a month apart to me is meaning something. Okay, that means that in this level, the market is still looking for something. Could be more medium termers, could be just people taking profits because we were at the level. But then we see a bit of a global dollar move and cable as well, where we were seeing a sterling which was not doing too well over the course of the latest period. Okay, we had the dollar move, but even on the cross side, sorry, the euro sterling being higher. But this is now building up as a pretty decent level, okay? On any data out of the US, get a retest and hold again, that is going to be really, really, really telling, okay? Obviously, if we break below them, probably going to have another 100 pips relatively straight away, relatively rapidly. I meant to say, but it is significant that we're holding again this zone, okay? Now, to turn it around, we have a bit of a similar situation as I just showed in the Kiwi. To turn it around, we need to break certain levels, okay? So we need to get above 134.5, 134.65, and I would even argue to really turn the ship around, we are going to have to tackle this 135, 25, 35 again, where we had this prior low, where we have a bit of FIB confluence here. 38.2 of this level of this move is coming in around there as well, and we have this broken trend line. So we are going. There's work to do. There's work to do. But in the meantime, we are. This is a level we can really bank on right now. Whether it is for a try long and then a very tight stop below, or if it breaks, you try to accompany. Also, it is a very, very decent level right now. So, but the jury is still out on whether this is a reversal that is starting, because we do have levels to overcome. Okay, so that I think is already a very interesting move in that we had, and we had it in several currencies. Ryan already showed the Aussie dollar as well. We had it on the euro dollar as well. So people are looking at some kind of a trend line here from May, but which was supposedly coming in there. But I fail to see it. Maybe if I go on a daily, perhaps or so. See, but still, maybe. But anyway, I mean, it's a bit of a rough guess, that one. Anyway, we broken below the 115.90, bit of follow through, and then a pretty decent move back higher, which already set in yesterday during the US time, okay? But we are running into this 116.40.50 again. And remember, we were talking about this 116.40.50 on the way up, on the way down, broken below it, retested it, broken and capped, and that's where we did our last low from. Always taking out this spike on Trump Powell. We ran up to 45 today, and so that means we are still respecting that level, okay? I wouldn't say that euro was looking as bad ever than, for instance, the sterling, which saw a much deeper move, Kiwi, which saw a much deeper move as well. So this one perhaps has a little less work to do to really reverse and start higher. But for now, for as long as we don't break this trend line 116.80 and then the prior spike high, which is roughly the spike high we saw on the Trump Powell saga, 117.10, then we can talk perhaps about that's been a consolidation correction, and then we start higher again. Very interesting, I think, if we start to get back up to those levels. A real data reason, there is none. So maybe we can just hang around here as well for the rest of the day going into the weekend. All right, going over to gold. Well, as I said, okay, when the trend line comes to market a bit rapidly, it's perhaps not the best one to look at. Okay, depending on whether you cut a few corners or not, give and take a few bucks. We held the trend line yesterday on gold, and we are seeing a move higher again. Okay, quick look below the range that we are building, went down there, and then a move back up. So and that coincides with roughly a bit of a low that we did here before. So let's say the trend line is still holding for now. So that's building the support just around 33.10. Okay, and now we'll have to see if at any time this afternoon we are going to see a test of this 33.70.75 again. The thing is, going into this weekend with the geopolitical, the headlines that are dropping here and there, Russia, Ukraine, China, and whatever, it would be a surprise if we go break this one today. I still think we are in a bit of a range right now, but we will see. If 33.70.75 goes, we'll probably quite quickly trade 34 figure 10 again. This one is really playing with my nerves, silver. It's really the same scenario as we've seen, just above 35. It's happening again above 36, 80, 37.30. You go close by and not get there. That still means that people are willing to pay up. Otherwise, we would have tests of the supports, the trend line, whatever. But people are still stepping in ahead of the important levels. So that still keeps this one really big for me until we really start to break below those levels, and then we may see a bit more correction. But for as long as we are in this similar scenario, I don't see why we would expect it to really trade much lower. On the contrary, we are again trading around this high that we had on the 15th, the correction high, then lower, and we are back onto it. So any push through this level, which is around where we trade now, is possibly going to have us a look at the prior high here. It's still undeniably beat this one, whether it is short or obviously more longer term. That is for silver. Inverted head and shoulders on Eurodollar. I don't know. I haven't seen one. It's if it's one, it's the a Hunchback of Notre Dame head and shoulders, mate. This one you mean? I mean, I will never take this one as a head also. This is just a no. It's actually a lot less than not perfect to me. But I am sort of done, Brian, for today. Pop,
Yeah.
unless tell me.
You done?
Well, yeah, I mean, unless you want me to look at something else, but I think
No, I think we're done. I'm too busy posting stupid pictures of Michael Brown in the chat room at the moment.
oh
So, yeah.
my God. I mean, why did you allow why did you allow Brownie in our chat room, by the way? Oh, let me see if I can do this. So this is according. Oh, I couldn't make a screenshot. Sorry, I'll leave it over to you, man.
Yeah, you'd have to drag it in.
Yeah, but I was trying to.
I'll drag it in. So yeah, this is the important stuff we get up to in our chat room, talking about what we're doing at the weekend. And there's good old Mr. Michael Brown in his. Oh, now I'm mucking it up. See,
Summer
right.
suit.
No, I'm breaking it. I'm breaking everything now. Right, end of the show. Cut. Go to commercial. Thank you, everybody.
Ali.
Yeah.
Now, Ali was asking what are the risk factors. No, asking to your question, we have spoken 15 minutes at the start of the show about the Japanese elections and the trade deals.
Yeah, and what it was going to do to dollar yen. So you'll have to watch the recording, Ali, because we're all done. Thank you very much, Mr. K, as always, and thank you, viewers, for coming and watching us here at the Flow Show. Hope you had a good week. Don't go and spoil it on a Friday. Be careful of that risk over the weekend, and we'll pick up the pieces on Monday if we're still awake.